Okay, it is 9:01, so we will get started. Aloha, everyone. Thank you for joining us today for the BSA training for credit union staff. My name is Sayaka James, Education and Training Director at the Hawaii Credit Union League. Joining us also is our Governmental Affairs Director, Paula Sumimoto Matsushima, and our Compliance Officer, Eugene Davis. A few quick housekeeping items before we get started. Today's session is from 9 to 12 with two 15-minute breaks in between. Your audio will be automatically muted to help minimize background noise during the presentation. By joining us today, you are consenting to be recorded. A copy of the recording will be available on our website at hcul.org under Professional Development at a later date. To help us track participation, please edit your screen name to include your full name. If you're joining us as a group under one login, kindly send me a private message with the names of everyone attending. Finally, a training log will be sent to each credit union as confirmation of participation. If you'd like an individual certificate of completion, please email us and we will be happy to arrange that for you. The email address to send your request will be in the Zoom chat. With that, I would like to pass it over to my colleague, Eugene Davis, to introduce our instructors for today.
Thank you, Sayaka. Good morning, everyone. It gives me a great pleasure to introduce our speakers today, Elizabeth Esposito and Jennifer McGee from Buckley Technology Group. I'll start with Elizabeth. She joined BTG in 2014 and currently serves as Vice President of Professional Services. Elizabeth's area of expertise include enterprise risk management with a specialized focus in IT and information security, business continuity, disaster recovery, vendor management, Graham-Leach-Bliley Act, and BSA and AML. Elizabeth is responsible for the daily operations at BTG and managing client relationships. When not developing compliance and risk assessment programs, she manages the development of BTG's compliance software solution called ISAC Online. And ISAC stands for Information, Security, Strategy, Audit, and Compliance. Elizabeth enjoys participating in speaking engagements and training seminars to help financial institutions with their compliance programs. Jennifer McGee joined Buckley Technology Group in 2016 and currently serves as the Senior Compliance Consultant. Jennifer consults within the areas of information security, business continuity, disaster recovery, BSA, AML, ACH, e-commerce, and vendor management. Prior to joining BTG, Jennifer was an integral part of operations and compliance functions at a community bank in Southern Connecticut. As a certified compliance officer, Jennifer aims to share practical compliance and risk assessment programs with clients and partner organizations. Please help me give a warm aloha to Elizabeth and Jennifer from Buckley Technology. Go ahead, ladies. Thank you.
Thank you so much, Eugene and Sayaka. We definitely want to extend our gratitude to the Hawaii Credit Union League for hosting this event and asking us to participate as a business partner to provide this training to the Hawaii credit unions. So we are definitely excited to go through today's seminar with you. So just to branch off on some housekeeping information that Sayaka had also shared, as she mentioned, the training slides and the on-demand recording will be made available after the presentation is complete. For questions today, we will be utilizing the Zoom chat feature. So as we go through the presentation, if there are any questions, if there are any comments, anything that you would like more information on, please feel free to enter those comments and questions directly in the Zoom chat. We will be compiling all of the questions collected and providing responses and answers following the presentation. So once the presentation slides and recording is made available, we will also make available that Q&A sheet for you so that you can utilize that as a resource. Additionally, all attendees for this training will receive a short questionnaire following. the presentation, and that short questionnaire will be utilized to capture not only your participation in today's training, but it will also be used to document that the training has been completed, and you can retain that as documentation for your annual requirement to undergo BSA training. So before we jump into the slides, I'm going to go ahead and focus directly on the presentation slide. So at this time, I'm going to unshare my video, and we can jump right into today's first part of the session. Okay, so part one, we are going to cover the basics of the BSA program. So there's a lot of information to unpack here, but we will go through it. If we need to spend additional time on some topics, we will, based off of the regulatory oversight and regulatory scrutiny within these areas. So under part one basics, we will highlight the background for BSA, or Bank Secrecy Act. We will provide a high-level overview of the program, as well as a history of where it came from and where we're at now. We will also discuss the 5 pillars of what we consider to be the foundation for BSA compliance. We will define and review the customer identification program or member identification program and the requirements within that. Additionally, we will branch off into your customer due diligence or member due diligence processes and programs, and discuss a little bit more of what we would like to see done maybe differently within your due diligence processes after risk rating your members and your accounts. And then finally, we're going to round out this part of the presentation by defining and going through the requirements for reporting. So specifically the CTR reporting and the STAR reports. So to get us started, it's always important to understand what the Bank Secrecy Act really is, where it came from and where we're at now. So the Bank Secrecy Act was enacted in 1970, and it really was designed to help identify the source of, large volumes of cash currency, the movement of that within the financial institution system in the United States, and really understanding how those that large currency is being transported and transmitted within the financial institution industry. The BSA also has a requirement. So from initial time that this was developed, it did require financial institutions to report cash transactions that were over $10,000 using the currency transaction report, or CTR. Part of that requirement also required the financial institution to identify who was conducting the transaction, as well as making sure that appropriate records were retained for those large transactions. Ultimately, the purpose, part of the purpose of the BSA was to allow law enforcement and also regulatory agencies to pursue investigations which initially focused on criminal tax and regulatory violations related to money laundering and other financial crimes. Since 1970, that has definitely transitioned and extended, which we'll talk about in the next couple of slides. But there are additional acts that were introduced to support the BSA umbrella. Specifically, the one that we want to focus on a little bit in today's presentation is the USA Patriot Act of 2001. So the USA Patriot Act of 2001 definitely changed the way that the financial institutions would open, member accounts, the way that we would verify member identity, and ultimately it extended the Bank Secrecy Act away from just criminal financial, crimes and money laundering to now preventing the funding of terrorism. So with the USA Patriot Act of 2001, the member identification procedures were definitely strengthened. They were enhanced. The requirements for your member identification process definitely included a lot more of a standardized process to verify and vet who your members really were. The Patriot Act also prohibited financial institutions from engaging in business with foreign shell banks. And it also required that financial institutions have a enhanced due diligence procedure based off of the risk profile of your members and account holders. And lastly, the Patriot Act did encourage and improve information sharing between financial institutions and the US government. And we're going to talk a little bit more later on in the presentation about those information sharing requirements. One is mandatory, one is optional, and really how that impacts the financial institution industry as a whole, but how that could be helpful for your credit union in the long run as well. So before we move into some of the more basic, requirements, we definitely want to go through and give a definition of money laundering. So BSA is, ultimately the framework, the legal framework surrounding the requirements for financial institutions, but it is to prevent money laundering as well as the terrorist funding, etc. So to define money laundering, this is a criminal practice of processing illegally gained or what we consider to be dirty money. And it goes through 3 separate steps to make it appear as if it is clean. So the first step includes placement. That means that these criminals, they're getting the funds into the financial system. The next couple of slides, we're going to talk about some of the methods that they would employ or use to get those illegal funds into the system. And then once it's in the system, then they move on to layering. So this is a process where they want to confuse the paper trail. They don't want this leading back to, hey, this is illegally gained funds or illicit funds. They are going to initiate a series of processes and methods to make sure that the funds are moved, utilizing a complex series of transactions. And then finally, once they are able to layer those funds, then it's fully integrated within the system. So now it appears that the funds within their accounts are legal, they are clean. So this is ultimately the purpose of our Bank Secrecy Act program and our AML program, is to make sure that we can identify suspicious behavior to prevent money laundering within your credit union as well as within the financial system as a whole. So we're going to talk a little bit in the next couple of slides about different methods that the criminals will use to money launder or place those funds within the financial institution systems. So the first most common is cash intensive businesses. So this is where that dirty money is mixing with legitimate income. So there could be a legitimate business that's either incorporated, that's registered. These could include restaurants, laundromats, convenience stores, liquor stores, vending machine operators. These are just a couple examples of what we would consider to be cash intensive businesses. And there is a legitimate business where the cash is taken in. However, because of the intensity and the volume of cash received, it makes it very easy to get that illicit money in and mix that with their legitimate income and revenue stream into the business. The second method for money laundering would include shell companies. So this is where criminals are going to establish and register businesses that really only exist on paper. There is no true business purpose behind it. There's no real activities for that business or that fall under the purpose of what they stated that business would be used for. And this is really just to hide where those funds really are coming from, those illegal funds. The third process is real estate. So money laundering can happen by flipping properties. So you will find, criminals will buy a property with illicit funds, and then they will flip it, sell it. The proceeds from that sale appear clean. So it is difficult to trace the origin of the illicit funds within, this method. So that's important to note. It's something that sometimes get forgotten when we think about BSA, that this could be a very common method in money laundering. To continue forward, structuring. So this is something that we probably hear most of, and this is the process of breaking down the large amounts of money into smaller transactions so that the criminals can then avoid those reporting thresholds. So, later on in the presentation, we will talk about those reporting thresholds for the currency transaction reports, the suspicious activity reports, but the criminals are aware of the BSA regulations. They are aware of the financial institution rules and requirements. So they will make sure that if they are depositing or withdrawing cash amounts, it is going to fall under that, $10,000 requirement. They're going to make sure that they're not aggregating the volume to require a CTR. So it's really important from a monitoring perspective to understand structuring and how to build that into the program, which we will talk about some methods for monitoring later on as well. And then finally, a very common money laundering method now is using crypto or virtual currencies. So the ability to remain anonymous, which is still a benefit by some forms of cryptocurrency, that anonymity is exploited by criminals. So it enables them to transfer funds across, different geographical areas within different countries, relatively easy to avoid that paper trail. So it's not tying back directly to them as an individual or directly to their business. But, it's important to note that the regulatory agencies, the FBI specifically, they are, implementing different methods to track and identify the source of some of these funds as it hits, the dark web and the black market, etc. So, as I mentioned before, the Bank Secrecy Act does remain the legal framework. It was initially implemented to counter money laundering, tax evasion, other financial crimes, and then it has since branched off to what we consider to be a CFT program, or countering the financing of terrorism programs. It now also extends to include reporting of other financial crimes that would include identity theft, cyber-related incidents, which we'll talk a little bit about as well, specifically ransomware attacks, business email compromise attacks. Unfortunately, elder financial exploitation is an area that continues to evolve and grow. So the BSA does account for that specific financial threat, and also human trafficking and smuggling. So part of our presentation today, we're going to dive a little bit into some of these threats. We're going to not only define them, but we will be providing some of those red flags that we want the credit union staff to look out for when it comes to helping to identify the suspicious activity and how we can prevent money laundering within some of these areas. So BSA compliance, as I mentioned before, it's founded on what we consider to be 5 pillars. So this is the foundation of what your program should be built on. So that includes a BSA compliance officer. It includes the internal policies and procedures, all of the safeguards and controls that you need to have in place, as well as your enterprise-wide training programs, a independent program testing requirement, and then finally customer due diligence or member due diligence. So initially, it's important to note that commonly the 4 pillars of BSA compliance did not include customer due diligence. It's best practice that is definitely a foundational part. Later on in the presentation, we're going to discuss some regulatory changes. We may see this increase to 6 pillars of BSA compliance when we get to the BSA risk assessment, discussion as well. So to break down the requirement of each of these foundational areas, the first one would be the BSA compliance officer. So the BSA compliance officer must be designated by the board and reappointed annually. That BSA compliance officer is ultimately granted the authority to develop the BSA program. So the compliance requirements as well as training requirements fall with this individual. The compliance officer should be fully knowledgeable of BSA requirements and related regulations. So one of the things that we mentioned within the CEO and board training previously was that your BSA compliance officers, they definitely receive the annual training as required. However, it's important to receive ongoing training. So this individual may attend more seminars, more webinars, just to keep abreast of all of the changes and make sure that those changes that are coming down the pipeline related to BSA can get proactively implemented within your program. And then lastly, a requirement for the BSA compliance officer is to make sure that they are reporting compliance activities to the board of directors and management on a regular basis. So this could include the number of SAR reports that are filed, the number of CTRs filed, if there are specific fraudulent trends that the BSA compliance officer is recognizing to be a heightened risk for the credit union. So that information is definitely helpful. It's critical to get that to the board of directors and management so that they can maintain oversight of the program as well. So the second pillar or foundation for your BSA program would include all of your policies, procedures, and controls as it relates to BSA and AML. So your written program, as I mentioned, it definitely has to include those controls specific to a customer identification program or member identification program. Those procedures will also outline the requirements for suspicious activity monitoring, reporting deadlines, and this written BSA program should be reviewed at least annually. So typically we find that the review process starts with the BSA compliance officer, and then any changes are then presented to management, and then finally it's presented to the board or appropriate board committee so that the approval process can be noted within the meeting minutes. So this is definitely a big focus when your exams come around to make sure that your written BSA program is reviewed at least annually and approved by the board. Some of those controls, as we mentioned as well, include the record keeping and reporting requirements, the due diligence process, and making sure that all of those reportable transactions are accurately and timely filed following the CTR and SAR requirements. So within this first part of the presentation, we are going to dive a little bit deeper into those requirements and make sure that everyone has a full understanding and awareness of what's involved with that process. The third foundational area for Bank Secrecy Act includes the enterprise-wide training. So this is why we're on this call today. It's number one, to make sure that everyone gets annual training and satisfy the annual training requirement. However, as noted before, especially with the BSA compliance officer, BSA training really should be ongoing. So it's really to make sure that everyone does have an awareness of the developments and changes to BSA and related regulations. Of course, there could be training that's completed, and then 2 months later, there's an update to one of the regulations or laws specific to anti-money laundering or financial crime. So making sure that that communication is regularly sent out with any changes to your staff is very important. Additionally, training must include board members as well as all employees. Training can be dedicated and built and designed to the roles and responsibilities of your staff members. So while we go through, what we consider to be general BSA training on an annual basis, you may find the need for your retail member staff or your teller staff to go through additional training, because ultimately they're the ones who are going to be helping to file those SARs, provide the information for the SARs or CTRs, and recognize the red flags before some of the other operational staff do. And then lastly, your training should be documented. You should retain completion records. Most of the times, credit unions that we work with, they will complete their training on an annual basis. They'll meet that requirement. But if they don't retain the logs of who completed it, when they completed it, that's usually, you know, an NCUA finding right off the bat. So we definitely recommend that the training completion records are retained with the BSA compliance officer, as well as maybe members of management as well, just to have that on hand to provide for examiners. Moving into the fourth pillar for your BSA program. So this includes the independent testing requirement. So on an annual basis, every financial institution must have a BSA audit or validation of those controls conducted. And it has to be by an independent party. So once that independent audit is completed, your auditor should be reporting those results directly to the board. So I would definitely make that a priority for your BSA audits moving forward, to make sure that the presentation of the results and discussion of BSA risk, as well as any, you know, findings, areas of improvement that might be needed or noted, get directly communicated to the board. Because ultimately the board is responsible for the credit union's BSA programs. Additionally, under the audit program or independent testing program, the credit union should implement a process to track findings and recommendations noted as a result of that audit. That tracking should be a living and breathing document. Maybe the credit union already has a tool or solution or Excel spreadsheet that they utilize to maintain audit findings and recommendations, but it's important to continue to review that and update that to document what corrective actions were taken to resolve those findings. Additionally, that tracking should be reported to management on a periodic basis, as well as the appropriate board committee. Sometimes we find that the supervisory committee does require frequent reporting of audits, and not just related to BSA, but IT, information security, lending audits, etc. So if the credit union does not already have a formalized process for this, we would definitely recommend, you know, thinking about what's the best approach to make this control effective for your credit union. And then lastly, the official but unofficial foundation for the BSA includes the customer due diligence process. So these are the policies and procedures that detail how the credit union is going to develop those risk profiles for your account holders. So this comes after the customer identification process or member identification process. It is a requirement. We definitely will talk about some of the regulatory changes and how this may affect the credit unions moving forward. But the procedures could include automated and manual ongoing monitoring for your account holders specific to that risk. So let's say you have a member account, and based off of the information collected at the time of account opening, you determine that that account is going to be higher risk for money laundering, just due to the nature of what the account holder says they're going to use the account for. You want to make sure that you are assigning a risk profile or a risk rating to that account, so that appropriate suspicious activity monitoring can be put in place, and appropriate reporting also can be in place. The CDD process and program also includes the requirement to update those assessments of your high-risk account holders on an annual basis, making sure that management and your retail team and operational staff is aware of who those high-risk account holders can be. Sometimes we find that credit unions will place a note on specific accounts, so that when that individual comes in to transact business, the teller or retail staff is already aware of, okay, here's what I have to look out for. Here's an alert on their account. So that information is always helpful. And then beneficial owners and the identification of beneficial owners also falls under this requirement. That has since changed. So we're going to talk about that a bit as well when we get to the later parts of the presentation. So transitioning right into the customer identification program, or the CIP requirements. The CIP does require all financial institutions to form a reasonable belief of the member's identity. So at time of account opening, there should be specific procedures that are approved by the credit union to collect different identity verification methods and documents, really ultimately to prove that the member is saying who they're saying they are. The CIP requirements also identify what the credit unions will do if they're unable to validate and verify the member's identity. So sometimes we'll see within the program policies that a credit union, if they're unable to collect those documents within a specific time period, that account is going to be closed. Or if they extend an exception to collect documents and verify information, that member is then limited to specific services and transactions. So for example, they may not have access to online banking or mobile banking right away. So this is driven by your specific BSA policy, and it's important for your retail staff to know exactly what steps should be taken if that information cannot be validated within the time frame stated. The CIP also requires, so let's say there's adverse action that does need to be taken to close that account because the identity cannot be verified. The credit union does have a requirement to provide adequate notice to the members that that action is going to be taken, and explaining why. And that falls again within your BSA policies. Specifically identifying information, so record keeping specific to account opening information must be retained for 5 years from the closing of an account. So later on in the presentation, we will talk a bit about record keeping requirements. So we'll revisit this topic as well to include what pieces of information must be retained for that 5-year period. So at the time of account opening, there are minimum pieces of information that's required to confirm. So that would include the name, the date of birth, the address, and the social security number or tax identification number. The confirmation and validation of the social security number or tax identification number, we will talk a bit about when we get to regulatory updates, because in June, there was a final rule implemented on how credit unions can validate and verify that information. So we'll talk about that in a bit. But there are different verification methods that can be used by the credit union to collect that information. So for individual members, of course, this would include driver's license, any state-issued ID cards, military ID cards, their passports, any other government-issued documents. For business accounts, this could include the articles of incorporation, government-issued business licenses or partnership agreements. And then there are also non-documentary sources that can be utilized to validate and verify member identity. So you may utilize credit bureaus, the check systems process, and utilize references from other financial institutions as well. So within your BSA policy, that under your program requirements, your member identification procedure should specifically outline the information that is necessary to be collected at time of account opening. So beneficial owners. So previously, the financial institutions were required to identify and collect documentation to verify beneficial owners of entities at the time of account opening. So you may recall that this requirement was to identify owners that had 25% or more stake in ownership of that company, or those who maintained primary and significant control over the entity. So the beneficial ownership information collected has definitely changed, the requirement changed as of March 25th, 2025. So all entities required or registered to do business within the United States are now exempt from this requirement. So this greatly reduces the burden for financial institutions. So the report is that this was brought down from 32.5 million entities required to report this information down to 11,667. So the reporting burden, as well as the burden on the financial institutions to collect and validate and verify the information to provide beneficial ownership information under the account has been greatly reduced. In fact, the requirement applies only now to existing and new foreign entities that are registered to do business in the U.S. So these and any entity that falls on their existing and new foreign, they are considered to be the reporting companies. And FinCEN has definitely made the process much easier. They have a website dedicated specifically to ensure that the foreign entities report their beneficial ownership information directly to FinCEN. And there was a requirement that this needed to be done by April 25th of 2025. It's also important to note that foreign reporting companies are not required to report beneficial owners that are considered to be U.S. persons, meaning they're U.S. citizens or residents. And then on the flip side, U.S. persons are not required to provide any beneficial ownership information with respect to any foreign company that they are a beneficial owner for. So we definitely have seen a great decrease in the burden of paperwork and documentation needed to report the beneficial ownership information. It is definitely a nice and need to have website so that that information can be reported directly to FinCEN as opposed to the credit union having to collect that on their own. So it's only appropriate, we talked about the customer member identification program. Now we're rolling right into the customer due diligence or CDD requirements. So the information that is collected during the CIP process at the time of account opening, this is the information that you're going to utilize to risk rate your member and business accounts. So most financial institutions will have developed a CDD checklist or some form of questionnaire that they will utilize at the time of account opening. And that's to identify and describe the purpose of the account, to identify the source of where the member or business primarily gets their funds, the occupation or type of business as well is captured at the time of account opening, as well as understanding if there are going to be significant cash volumes, either for deposits, for withdrawals, as well as expected international activity that may occur, maybe in the form of international wire transfers. So all of this information is necessary to be captured at the time of account opening because it will help you define your member's risk profile. And some institutions still capture this information in a completely manual way as far as defining and assigning that risk profile. Some institutions may utilize technology solutions specific to the BSA requirements. One example of that is Verifin. So Verifin, once that information is collected, the risk profile can be set up within the technology solution, and then it will automatically trigger ongoing monitoring alerts back to the credit union that falls within that risk profile. So if anything is seen as suspicious or outside of normal activities or outside of that normal baseline, that technology solution will then trigger those alerts back to the credit union to say, hey, you may want to check this out and identify if this is subject to reporting for suspicious activity. From a manual perspective, we do see that credit unions who risk assess, risk rate, and set up member risk profiles on a manual basis anything that's manual, there can be inconsistencies within the program. There can be weaknesses as far as how that information is set up and then communicated back to your retail and member services staff so everyone is aware. So we definitely encourage all of the credit unions to make sure that whatever method you're using, whether it's manual or whether it's utilizing an automated piece of software, that your risk profiles are consistently applied based off of the type of account, the type of business, and the transactions that are expected to flow into that account. So there is a requirement for enhanced due diligence that falls under the CDD program. So enhanced due diligence is necessary for those member accounts and transactions that have a higher risk of money laundering, terrorist financing, or other financial crimes. So the types of accounts that would fall under this that we consider to be high risk include those cash intensive businesses that we defined earlier. So that would be convenience stores, laundromats, restaurants. Non-US persons would be considered a higher risk as well. So we definitely want to make sure that there is enhanced monitoring for those accounts. The other types of accounts that could fall under a high risk account would include charities and nonprofit organizations, attorneys, accountants, any foreign correspondent accounts, and also marijuana related businesses. So within your programs, within your written documentation, your procedures, it should outline the specific due diligence requirements that the credit union is going to follow to not just risk rate and assign a risk profile for these types of businesses, but also what the credit union is going to do to monitor for suspicious activity and how that's going to be consistently applied to high-risk accounts moving forward. So at this time, we're actually going to take a 15-minute break. We're about 45 minutes within the presentation. So I'm going to stop at the currency transaction reporting so that we can start fresh with all of our reporting requirements once we come back in 15 minutes. Okay, so I hope everyone has had an opportunity to top off their coffee because we're definitely now going to get into some of the nitty-gritty details as far as your BSA program requirements, specifically to reporting. So to kick off the reporting session or section of this presentation, we're going to start off with the CTRs or currency transaction reports. Okay, some technical difficulties, but we're back again. Okay, so for the currency transaction reports, so these CTRs, they must be filed electronically with FinCEN for each transaction in currency of 10,000 or more, and that filing period must be within 15 calendar days of the transaction. If there are multiple cash transactions within a business day that end up totaling or aggregating to be more than $10,000, that is to be treated as a single transaction and would require reporting for a CTR as well. Per regulations and record keeping requirements, CTRs should be retained in hard copy or electronic form for 5 years from the date of the report or the date that the report has been filed. And it is important to note that these currency transaction reporting requirements do allow for exempt persons, which we will define in a bit. So the first one includes the phase 1 exemption. So there's 2 phases under the regulations. The phase 1 exemption includes any of the following entities, meaning that these specific entities, any transactions conducted by them, whether or not it is $10,000 or more, they do not need to have a CTR filed against them. So this would include banks, governmental departments or agencies, any entity exercising governmental authority within the US, listed public companies, or subsidiaries of those listed public companies. Phase 2 exemption is a little bit different. So phase 2 exemption would include transactions that are conducted by smaller businesses that specifically meet FinCEN's criteria to be exempted. So there's two different categories that fall under the phase 2 exemption. The first would be non-listed businesses, and second would be any payroll customers or members. So we're going to break those out and define them at this time. So for non-listed businesses, these would be businesses that have maintained a transaction account at your credit union for at least 2 months. They frequently engage in currency transactions that are greater than $10,000 at any given time. And also they are incorporated and registered to do business in the US. So they must meet those requirements. However, businesses that are considered to be high risk for money laundering are ineligible from this CTR exemption. So that would include, again, those high risk types of business accounts or accounts that we discussed earlier. So cash intensive businesses would include convenience stores, your laundromats, restaurants, liquor stores. These would also include attorney accounts, accountants, investment advisors, real estate brokerage accounts, and businesses as well. So if the business or the purpose of that account falls under these categories, you would not be able to file a phase 2 exemption for those accounts. So to define what the regulations mean by payroll customers or your payroll members, so these are entities that have maintained a transaction account at your credit union at least for 2 months. They frequently withdraw more than $10,000 in order to pay its US employees in currency. And of course, they must be incorporated and registered to do business within the United States. So the process for filing a CTR exemption, whether phase 1 or phase 2, would require the use of a designation of exempt person report or a DOEP report. So the credit unions must file this at least one time within the BSA e-filing system. And this filing does have a specific time frame that it needs to be made, which is 30 days after the first transaction in currency, where the credit union has identified, okay, this is going to be a continuing transactional type of process. This is something that they would be exempt from CTR reporting for, as long as they met those requirements that we outlined earlier. It is important to note that the designation of exempt person report is not necessary to file for banks, federal, state, or local governments, or any entities that are exercising governmental authority. Specific to phase 2 exemptions, so these must be reviewed and verified at least annually, and must be monitored for suspicious activity. So of course, these would include those non-business accounts or the payroll customer or member accounts that you have. You want to make sure that you're continuing to monitor for any changes within their risk profile and within their transactional baseline. So if they no longer complete these types of transactions, if the purpose of the account has since changed, or if it has become more risky, the frequency of these types of transactions are increasing, it is definitely important for your BSA compliance officer, your management team, as well as your BSA operational staff to have that type of awareness of, okay, these are changes, or this account is stable, we're not going to take any further action. But it does still prompt the necessity for monitoring for suspicious activity. That is sometimes something that is lost within translation of filing a CTR exemption. So even though a CTR exemption is filed, there is still suspicious activity that needs to be monitored. The accounts do still fall under the customer due diligence or enhanced due diligence programs as well. So moving right into our SARS or suspicious activity reports. So our SARS must be filed for activities of concern that may be a violation of the law. So specific to BSA and the AML related regulations and rules, this would include filing a SAR for insider abuse regardless of the amount. If there are transactions that aggregate $5,000 or more, when the suspect can be identified, then a SAR is necessary. Regardless of the identification of a potential suspect, if the transactions aggregate $25,000 or more, then a SAR must be filed. Transactions aggregating $5,000 or more that meet the following requirements, where the credit union either knows, suspects, or has reason to suspect that the transaction either involves money laundering or other illegal activity. It's designed to avoid BSA regulation. So again, they're possibly structuring their transactions to avoid that reporting threshold, or the transaction is not the type of activity that the customer member would normally conduct. So a SAR would be required within that instance as well. Within the past few years, of course, cyber incidents or cyber attacks have also prompted the requirement for a suspicious activity report. So again, we're seeing that BSA initially was adopted and implemented for tax evasion, money laundering, different financial crimes, and has now evolved to include not just those types of risk, but also funding for terrorist activities, as well as cyber financial crime activities as well. So the time frame that a SAR must be filed is within 30 days of detecting that suspicious activity. If the credit union is unable to identify a suspect, then the timeline can be extended to 60 days. So for example, let's say that there is a cyber event that takes place. An employee's email has been compromised, and there's suspicious activity, there's suspicious logins within that email. That email compromise prompts not only your incident response for that cyber event, but it also prompts the credit union to file a suspicious activity report as well. You may not be able to identify who exploited your employee's email and broke into that account. So that timeline would be extended to 60 days within that example. It is important to note that the credit union may conduct an investigation prior to initiating the 30 or 60-day countdown. And of course, individuals on whom the credit union is filing a SAR on should never be notified or informed that a SAR is going to be filed on them. And a suspicious activity report is still required to be filed even if the activity takes place outside of the United States. So these are all requirements that fall under your BSA program that all of your operational staff should be aware of when looking and monitoring for that suspicious activity. So from a record-keeping perspective and a reporting perspective, your SARs must be retained for 5 years from the date of the filing. Additionally, the number of SARs filed should be reported to the board. So this is falling back to the BSA compliance officer responsibility and requirement that the activities that take place that fall under BSA compliance are then reported back to the board, so they have awareness of where the credit union's risk exposure falls at any given time. Depending on the activity that the SAR is being filed for, law enforcement can be notified. So this does align with your incident response plans and your incident response policies, where there are different notification best practices and requirements to involve and potentially collaborate with law enforcement to make sure that the activity is fully investigated and or prosecuted if needed. The credit union can also continue to file ongoing SARs every 90 days if that suspicious activity continues. So this is something that, of course, would be under review and discussion between the BSA compliance officer, management, as well as retail staff or the operational staff that is monitoring for the activity. So that wraps up part 1 of today's training, which is where we covered the BSA overview. We defined some of the program requirements, as well as the basics with reporting and other controls that need to be put in place. So at this time, we're now going to roll right into part 2, which is understanding the regulatory landscape. So where are we at within the industry right now? What are some of the hot topics that you need to be aware of, and some of the enhancements that may be needed within your program? So just to reiterate again, if there are any questions as we go through the presentation, if there are any comments, please feel free to utilize the chat feature, enter your questions there, and then following the presentation, we're going to compile all of those questions and provide a response to them for all of the attendees. So under this part of the training, we're going to cover information sharing requirements, how you can utilize that as a resource to enhance your overall business Bank Secrecy Act programs. We are also going to review regulatory updates and how that's going to apply to risk assessment enhancements. So that's going to be a big topic for discussion, as well as, providing some insight on where we'd like to see the credit union make changes to their risk assessment process. We're also going to highlight a recent enforcement action and utilize that as a tool and a resource as well to help build upon your BSA programs. And we will discuss some common compliance issues that we would like to see credit unions avoid now and going into the future. So to kick us off within the regulatory landscape, we're going to talk a little bit about information sharing. So Section 314 of the U.S. Patriot Act did establish procedures for information sharing, and the purpose was to make sure that FinCEN, or the Financial Crimes Enforcement Network, can deter money laundering and terrorist activity. And the only way that they can do that is if the financial institutions participate in providing mandatory requests for information and or can choose to opt in to share information as well. So under this section, there are 2 separate types of requests. The first would include 314A, which is sharing with FinCEN. The second is 314B, which is sharing with financial institutions. So for the first one, FinCEN 314A, these are requests that are received every 2 weeks, and those requests require that the financial institution search through records of current or past accounts to identify any accounts or transactions within a named suspect as part of that request. If there are any reports or any positive matches to FinCEN, that must be reported within 14 days unless the request has a different timeline, which would be otherwise specified. Additionally, information contained in FinCEN requests cannot be disclosed. So that's definitely important to note, especially when we move to 314B and kind of cover that optional information sharing process. So 314B enables financial institutions to voluntarily report activity that may involve terrorist activity or money laundering with other financial institutions. So if your credit union decides that they want to participate within the 314B information or information sharing and requests, then you must notify FinCEN of the intent to share, and this must be done annually. So FinCEN does provide a list of other participating financial institutions. And really the purpose of this is so that the credit union can be aware of maybe some activities, some threats that may pose a risk to your geographical area, some of the hot topics that you might want to look out for. Sharing of information like this is also important and can be important to be used as a training resource or a guide. So specifically, if a financial institution has been subjected to a BSA threat or BSA fraud, and they've decided to share what their corrective actions have been, what their process has been to respond to that incident. That can be vital information for any institution that's opting into share under 314B, because you can utilize that as a resource to help build upon your BSA program, or to potentially implement controls that you may not have already thought of. So it is important to note that voluntary information sharing does not permit a financial institution to share a suspicious activity report that has been filed. You cannot disclose or deny the existence of a suspicious activity report, and you cannot disclose the credit union's intention to file a suspicious activity report. So there is definitely going to be limits in the type of information that's shared, how much information you can share, but it is definitely something to consider if your credit union is not already participating within the process. So moving into regulatory updates. So as I mentioned, it's very important for your BSA compliance officer, your BSA operational staff to receive ongoing training to make sure that they're aware of some of the changes that have come out or have been implemented since the last time they received the annual training. So supplementary training is always important. But for today's presentation, we're going to go through some of the more major regulatory updates that have recently happened or are on our. So on June 27th, 2025, FinCEN did provide a customer identification program, tax identification number exemption order. So what this means is that the exemption allows financial institutions to use an alternative way to collect and obtain the TIN information from a third-party source rather than from the member. Again, that's provided all other customer identification requirements are met. So the tax identification information still needs to be verified before account opening or at the time of account opening. And the record keeping requirements and the documentation utilized to verify the members are still required under this exemption. So the use of this exemption is optional. Financial institutions are not required to use an alternative collection method for tax identification information. This was meant to help facilitate more of a digital banking environment. So as we know, more of our members, more of our consumers are transitioning to digital landscapes to conduct their business, conduct financial transactions. More financial institutions are offering online account opening, but with that comes the consumer risk and the consumer hesitation to input their full 9 digits of their social security number or their tax identification number. So what this does is it allows the credit union to have flexibility to validate that information through a third party and also provide an additional level of security to your members, where they may have that hesitation to provide their full social security number. So for example, financial institutions can now collect only the last 4 digits of the tax identification number for your members. And you can then verify the full 9 digits through a third-party source for all accounts. So this is a process that we're already familiar with when it comes to opening credit card accounts. But specific to checking accounts, savings accounts, transactional accounts, this is something that you can consider to implement should your account opening solutions and processors that you use already offer this as an option or a method. All right, so let's talk a little bit about marijuana related businesses. We've been tracking, whether this is going to happen as far as rescheduling marijuana to Schedule 3 under the Controlled Substances Act. So what this basically means is there is a movement to reclassify marijuana the type of drug that it is, the impact that the drug has on an individual, and how we want to treat it from a medical and legal perspective. So rescheduling to Schedule 3 has not happened yet. Even with rescheduling, or even if rescheduling happens, it's important to note that financial institutions would still be subject to BSA requirements as it relates to marijuana-related business. So you would still need to complete and conduct the due diligence and enhanced due diligence on marijuana-related businesses. They would still be considered a high-risk account for your credit union. And you would still need to continue to file a marijuana limited suspicious activity report. So it is important to note that rescheduling does not eliminate the conflict between federal and state laws. As we know, there are many states in which marijuana activities are legal for recreational purposes. However, under the rescheduling to Schedule 3, marijuana will still remain illegal under federal law for recreational use. And state legal activities involving marijuana would still be federally prosecutable. So this is something we wanted to include within the presentation because, we're tracking it not just from a fraud or, drug trafficking perspective to identify if there could be suspicious activities related to this, moving it to Schedule 3 under the CSA. However, it does still apply to BSA. So while we would like to see some of the regulatory and reporting burdens lightened, they will not. So marijuana-related businesses, even if moved to Schedule 3, will still be subject to the same BSA requirements that we've had and that we've seen. Okay, so let's talk a little bit about the proposed rule to strengthen and modernize your AML and CFT programs. So June 28, 2024, FinCEN did propose this rule, and they are really aligning themselves with other regulatory agencies where they're looking for more of a risk-based approach to design an effective program. So we've seen this phrase before, risk-based approach, when we talk about IT, information security, cybersecurity, fair lending. It all falls back to the credit union understanding where their risks falls, what controls they have in place to mitigate that risk, and then designing your program to then be effective for your credit union and your risk profile. So it really does standardize the AML program requirements to include the risk assessment process. So right now, it's not a specific requirement that a BSA risk assessment needs to be completed. However, many credit unions already perform a BSA risk assessment on an annual basis. So we're going to talk a little bit about the changes and enhancements that would need to be made to your existing BSA risk assessment. But it's important to note that government-wide AML and CFT priorities, they must be incorporated into the risk-based program as well. So this would include national security concerns. So it doesn't just limit the credit union's BSA program or risk assessment program to the threats that are, within your geographical area or within the business products and services that you offer. It would have to include a government-wide approach to identifying and assessing those security concerns, as well as it relates to money laundering and terrorism financing. So the BSA risk assessment enhancements, due to these proposed AML and CFT programs from FinCEN, it would still require, the minimum information that we see, which is that the risk assessment is used to identify and assess your products and services that may pose a higher risk of money laundering, terrorist financing, or maybe fall within other BSA violations. So these higher risk products and services, of course, would include your wire transfers, ACH transactions, your peer-to-peer services like Zelle, Venmo, etc., things that you offer. Any type of digital banking services as well would fall under what we consider to be a higher risk product or service. In addition to that, your BSA risk assessment would still need to account for your high risk or those cash intensive member and business accounts. So we keep falling back to cash intensive member and business accounts. It's really important, again, to just reiterate, those would include restaurants, it would include gas stations, convenience stores, liquor stores, laundromats. So the BSA risk assessment will continue to not only quantify the number of cash intensive or high risk accounts the credit union has, but it also will assess if that risk is continuing to stay at a baseline level or if you're taking on more and more accounts and that activity is starting to grow. Lastly, your BSA risk assessment as it stands right now should also include geographic locations in which the credit union operates. So this would include the identification of operating branches and loan centers within high intensity drug trafficking areas and high intensity financial crime areas. So that information is made readily available to identify which counties you operate out of and which would be considered a HITA or a HIFCA. So where we're going to see changes and where we've already been seeing changes from a compliance consulting perspective is that your BSA risk assessment must now include a trends analysis of those high-risk activities. So before we were seeing credit unions were quantifying maybe just, the number of accounts, looking at if there was a change year over year. But now there's really a push and a specific requirement that we've been seeing from NCOA examiners to assess that risk exposure to money laundering and BSA violations. And so the trends analysis can be visual. It doesn't have to be visual. But here's just an example of the trends analysis that we as an organization at BTG have been implementing for the BSA risk assessments that we performed. It's definitely something that you can adopt and implement within your BSA risk assessment. However, it's important to note that this is the change that's needed for you to have either a visual view or a high level view of where your risk has fallen. Whether you're still at a baseline level for activity of CTRs filed, SARs filed, if there's been a change in the number of accounts opened month over month. So we definitely recommend starting off with some of the basic information. So this is basic information that would already need to be reported to management and the board. It would then just be a matter of taking that same information and incorporating it into your BSA risk assessment. So you're now looking for that trends analysis. So just using this example, using some of these charts as an example for BSA monthly reporting. If we look at June of 2024, there was only one CTR filed, no SARs filed that month. But then we look at July and we're now filing 3 CTRs, 2 SARs. So that prompts more of a review and more of an investigation to say, okay, what's changed? Is it the same account? Is it the same account holder? Where has the escalation and activity come from? What's the source of that? Additionally, for the number of new accounts opened, that's also important to track for trends as well, because we want to make sure, number one, that you're following your CIP process of opening the accounts with the members' information verified and validated. But also, this is kind of an internal audit as well that can be utilized. So if you see that there's a specific month where that number has jumped, where you're opening more accounts in person or even online, you can split that activity out in 2 to track. That prompts a review of, what type of accounts have come in that month. So if we're looking at 20 in April, but then there were 42 in May, that prompts management and the BSA compliance officer to do a little bit of more of a suspicious activity monitoring and identification to understand the types of accounts that were opened, what may have caused the surge in account opening. Maybe there was a member-to-member referral promotion that would explain it. Maybe there's not. So we definitely would like to see more of a trend analysis within your risk assessments. Specifically, the risk assessment would, under these new proposed rules, they would now need to be updated at least annually and presented to management and board of directors. And as I mentioned before, this is actually one of the most commented on weaknesses within the last 12 to 18 months from credit unions that have undergone their exams. So credit unions who have reached out to Buckley Technology Group with assistance in completing their risk assessments, their specific finding and recommendation is that their current BSA risk assessment does not include this risk-based approach and this trends analysis to identify the changes in their risk exposure and their baseline. So it's definitely something that we wanted to spend some time on, talk a little bit about. We definitely encourage all attendees, if there's additional questions, please feel free to ask away in the chat feature, and we will respond after the presentation. All right, so let's take some time to go through enforcement actions. So to define and provide an awareness of this, so we have our 5 pillars of BSA compliance requirements. If there is any weaknesses within those 5 pillars, the credit union or an individual employee or board member can be subject to criminal and civil penalties. So specifically, an individual employee or board member who willfully violates any BSA law violation, they can be subject to a criminal fine up to $250,000 or 5 years in prison. Additionally, a financial institution that violates certain BSA provisions would face criminal money penalties up to the greater of $1 million or twice the value of the transaction. There could also be civil money penalties applied at an individual level as well, but we also see that from time to time, FinCEN will release enforcement actions and consent orders in which an individual is stated to be removed from their position and they are prohibited from holding any type of office or authority within any insured depository institution moving forward. So it's definitely important to note the requirements for the BSA law, your AML programs. This isn't just let's just check the box and we're done with it. There's definitely a impact and a significant impact if there are weaknesses within your program. So what we recommend from a consulting perspective is, we regularly receive those alerts for consent orders and enforcement actions that are taken. It's really important to create a process or internal procedures to utilize that information and those alerts as a resource for training. So when I pull up a consent order or enforcement action, there's certain questions that I ask, certain information that I try and find from that, which is, what were those pillars of the BSA and AML laws that were violated? So did they not have a designated and properly trained BSA compliance officer? Did they knowingly not file CTRs or suspicious activity reports within specific time periods to meet the deadlines? That they not have appropriate monitoring in place to identify suspicious activities and suspicious transactions. So those are the types of questions that I look for in the details to help understand where their weaknesses were, and of course, what was the root cause. So the consent orders do a very good job in providing those details, providing that information. It is insightful. Again, it could be used as a training resource. I also look for what's the timeline for the corrective action. So if FinCEN and the other regulatory agencies are giving the organizations and financial institutions an opportunity to resolve the issues, what does that look like? How long do they have to resolve this? What are not just the monetary penalties and civil money penalties, but where does the burden fall? So, what does the full resource package look like to correct these actions? I also look for how long the investigation period for those violations took place. So when we see the consent orders, it's not just, 1 month period that the examiners came in, they identified there was a flaw within your program, and now they're issuing a consent order. This is always involving a extensive period of time. It's important to note how long that period of time is before the action is taken from FinCEN and the other regulatory agencies. And then backing into, again, the root cause. So what controls were lacking within that entity or financial institution's BSA program? And really it's hashing out the details and identifying what that institution could have done differently. So in a way, this can be used, again, as a training resource. It can be used to help build upon your own BSA program and compliance program in identifying some of the common weaknesses within the consent orders, and really taking that and applying it back to your credit union to say, okay, we're going to avoid this. We're going to make sure that we have these controls in place so that when it comes time for our exams, we're not going to fall subject to violations, consent orders, enforcement actions, civil money penalties, criminal money penalties, etc. So I'm going to just use one consent order enforcement action as an example of really this is worst case scenario. So in February of 2024, TD Bank was assessed a $1.3 billion penalty by FinCEN for violations of their BSA and AML law. So the investigation period took place over 10 years. So again, that's important to note. This wasn't something that FinCEN identified was a matter of, maybe there's new staff and training wasn't sufficient. This was a 10-year period where this financial institution decided they were not going to address the weaknesses exam after exam. So the violations are definitely numerous. So the consent order does list out some of those examples. A couple of those examples include that their Venmo and Zelle transactions were actually indicative of human trafficking. So if the bank, specifically if their fraud monitoring, their BSA monitoring programs were effective and designed as they should have been designed, then TD Bank should have identified some of those red flags. They should have been able to identify that suspicious activity and then report those transactions as a SAR back to FinCEN, but they failed to do that. So they had significant deficiencies within their monitoring programs, and they failed to complete SAR reports when they should have. Another example is that a TD Bank employee actually facilitated the laundering of narcotics proceeds in exchange for bribes. So that employee actually opened numerous TD Bank accounts, and they opened shell accounts. So again, shell accounts are companies that are registered, but they're only registered to paper. There's actually no real business income, no real purpose for that business other than to funnel illegal funds through. So the suspicious monitoring for that employee was almost non-existent. So they were not monitoring the types of accounts being opened. They weren't monitoring whether or not the appropriate customer identification procedures were followed to verify the customer information. There clearly wasn't a customer due diligence process being consistently or appropriately followed as well. So in total, while FinCEN assessed a $1.3 billion fine, in total, TD Bank is required to pay $3.09 billion to US regulators. In addition to the financial penalties, the OCC, or the Office of Comptroller of Currency, they've imposed restrictions on the bank's growth within the US retail market. So when this information came out, we actually saw a lot of closures of TD Bank locations across the United States. So, this definitely is going to impact not only their footprint and the ability for them to service their current customers, but it does impact the ability for them to be able to repay this financial penalty. The bank is also required to restructure its corporate compliance program. So it needs to relocate its AML oversight team specific to the US BSA and AML laws to the United States. So they have to actually be in the geographical area of the United States to monitor and manage the compliance program. And the bank is also required to establish a remediation office to resolve all of the deficiencies noted within that 10-year period. So again, this is worst case example of if any one of those pillars of your BSA program is weak or there's cracks within that pillar, there could be significant impact, not just monetary impact, but definitely limiting the financial institution's ability to conduct business and continue to provide services and products to customers. And not to mention the reputational risk as well. So we're going to round out this part of the presentation, so part 2 of presentation, by discussing common compliance issues. So, at Buckley Technology Group, we engage with credit unions on various compliance matters. Specific to BSA, these are the things that we find to be the most weak or we see there's a lack of control when we go in and we perform the BSA risk assessments. So the most common is that there is no process to assign a risk profile to your members, which would help identify suspicious activities versus what normal business or normal member activity looks like. So this really falls as a weakness in the customer due diligence or member due diligence process of, okay, we've opened the account, we've established what that account is going to be utilized for, but now we're going to assign a risk to it, whether it's low, medium, or high. That risk rating is necessary to prompt your operational team, your compliance officer, whether you utilize a tool or you're completing this manually, that triggers the requirement for that monitoring activity or the level of monitoring that needs to be conducted. So if there is no risk profile assigned and no process to assign a risk profile, then really how are you monitoring suspicious activities appropriate to your credit union? Additionally, what we see as a common compliance issue is that there are manual or limited monitoring in place for transactions. So some of the basics we see is, of course, there's an aggregate cash transaction report that's pulled on a daily basis from your core systems so that it can help you identify if there are transactions that equal $10,000 or more within a business day that would prompt a CTR. So we know that that's a procedure, that's something common we find within all credit unions. But some of the manual effort, and again, this comes back to your credit union itself. So smaller credit unions, those where we find our BSA compliance officers are wearing multiple hats. So your BSA compliance officer may be your CEO. There is very little resource and time necessary to do transactional monitoring the way that it really should be done. The answer, I would say, is not to automatically roll to a technology solution like Verifin, because with all systems and with all software, it's only as good as how it's used. So if there is no time to manage and monitor the alerts that are turned out from those types of automatic solutions, that also doesn't benefit the credit union much. So this is really a way of, the credit union having to find a nice balance between what works for transactional monitoring, making sure you're still, whether it's manual or automated, you're still getting the information needed to comply with the BSA requirements to file either a CTR, a SAR, and continue to monitor for suspicious activity. The third area or common compliance issue that we typically find as well includes a high turnover within the retail and member services space. So your frontline staff, if there's a high turnover there, this can lead to a lack of consistent training and member due diligence practices. So if you're constantly having to retrain, new staff coming in, they may be doing things a little bit differently than some of your senior staff that have already been there, that are more familiar with the processes to open an account, to monitor for suspicious activity, and more importantly, to recognize red flags when a member walks in. So it's definitely important that at time of new hire, BSA training, of course, is a requirement that all new hires have to go through the BSA training so that they're aware of what to look for, but also just making sure that you're continuously monitoring for the need of ongoing training so that your practices are consistently applied by all employees. Additionally, what we find to be another compliance issue is that the monitoring does not include e-commerce transactions. So again, the industry is moving into a very digital space where less and less members are coming in to our physical locations to conduct business. So they are depositing checks through mobile remote deposit. They are doing bill pays through online banking. There's more frequent ACHs, more frequent online purchases. So it is important to make sure that your BSA program not only includes suspicious activity reporting for physical transactions, but it also includes the monitoring for your e-commerce platforms as well. Because there could be, again, the cryptocurrencies that we mentioned before. There could be layering involved within moving transactions from account to account, peer-to-peer transactions as well. So it's important to recognize if at this time your suspicious activity monitoring process includes your e-commerce platforms or not. If it does not, I highly suggest making sure that there is a control put in place to account for those. And then lastly, as we discussed, the risk assessment today, as it is, it does not assess the changes to the credit union's risk exposure. So while some of the other elements are still met within that risk assessment, such as risk assessing the products and services, identifying risk within the geographical areas you operate out of, assessing your high-risk accounts, it does not include that trends analysis. So, every single credit union that has come to us within the last 12 to 18 months to engage in a BSA risk assessment, it has been specific to an NCUA recommendation that they now need to do this. So, we are definitely available as a resource for you. If you have questions about how you can implement that within your internal risk assessment that you complete, feel free to ask those questions within the chat. We'll definitely be happy to help answer those and provide some guidance for you on that. So at this time, we're going to take our last break. So we're going to jump off for 15 minutes, and then when we hop back on, Jen McGee is actually going to take over the presentation to discuss part 3 for suspicious activity monitoring. So we will see you all back here in 15 minutes. Okay, welcome back, everyone. So I am actually going to continue with the presentation. Jen, our compliance consultant, senior compliance consultant, she's actually having some audio difficulties. So I hope everybody is geared up to finish off strong. and go through some of the suspicious activity monitoring topics that we have lined up for you today. So first, we're going to start off by going through some of the trending threats that we all should be aware of as it relates to BSA. Following those threats, we do want to provide some red flags awareness indicators specific to different behaviors that you can probably spot, or even financial transactions to look for when it comes to suspicious activity, identification, and monitoring. We will be including OFAC screening just briefly within the conversation here, as well as wrapping up some of the record keeping requirements that we had previously touched upon. And then finally, we're going to close out strong with some information on how to monitor for suspicious activity beyond just transactions. So some of the BSA trending threats that we wanted to include within discussion today include cybercrime, real estate fraud, elder financial exploitation, and human trafficking and smuggling. So we're going to break each of these down and provide just some insight on things to look for, as well as why these are trending threats within your BSA program today. All right. So kicking off with cybercrime. So FinCEN reports that the number of cybercrime related BSA filings, so specifically suspicious activity reports, the number in STARS filed related to cyber events continue to grow year over year. So these specifically involve ransomware attacks and business email compromise attacks. So for those who are unaware of what these mean, so ransomware attacks include malicious software that gets deployed to your network systems. Once it's on your network system, you are then prevented from accessing any information because they've encrypted your data, and they require some form of payment, mostly within the form of cyber currency, to release and unencrypt that information back to you. So financial institutions who have been victims of ransomware attacks, they are filing suspicious activity reports so that that information then gets passed on to some of the other reporting agencies to monitor for evolutions within that risk, and so that there continues to be a focus from the regulatory bodies on how do we mitigate this risk, how do we get to the core and the root cause and some of the game players of who's deploying these attacks. Business email compromise. So when we mention business email compromise, we're actually talking about your work email, or it could also be your consumer email. But this is where your credit union email is actually compromised and exploited. So the criminal has found some way to legitimately log in to your email. So they've gotten access to your credentials, they've logged in, and they are sending email requests as you. So when the receiver receives that email, it doesn't look suspicious unless there's typos, misspellings, or unless they're following their red flag policies, which is, they're recognizing that maybe they're receiving a request from you that's not typical or not usual. But once that business email compromise happens, the credit union should also file a suspicious activity report as well, with as much information that they have available to them. And again, these reports are meant to help the regulatory bodies track these instances, as well as to help provide additional guidance for other financial institutions on how to mitigate these risks. So once that report of suspicious activity is filed with FinCEN, it should highlight the presence of what we consider to be cyber event indicators. So these are details that are very important. So it could be suspicious email addresses, maybe file names that they've included within the malicious attacks. hashes, domains, the IP address, if you're able to find where they've logged in to your business email, what IP address they've logged in from. That's all important information to include within that suspicious activity report. And since we're talking about cybercrime, this aligns directly with your incident response policy and plan. So while you're completing your suspicious activity report, it is also important to note that there are other notifications that need to be made to other agencies in the event of a cybercrime. Specifically, NCUA does have a cyber reporting rule that requires the credit union to report a cyber incident within 72 hours of identification. So this definitely hits on multiple laws, multiple regulations, multiple requirements, but it's definitely a process to make sure that you have in place within your BSA program that should you be a victim to cybercrime, that your suspicious activity reports are filed timely as needed. So real estate fraud. So previously when we discussed money laundering techniques, we mentioned property flipping being one of those methods. So there are definitely two different forms for real estate fraud. The first would be fraud for property. So this is where the applicant is coming in to borrow funds where they're overstating income, they're overstating their asset values, hoping to qualify for a loan. So this could include social security number fraud, definitely identity theft, and loan documentation fraud. So these are all things to be aware of when it comes to fraud or requesting borrowing of funds for property. Fraud for profit. So this is where property flipping comes into play. So these are fraudulent methods that are used to acquire and dispose of property with inflated profits. And again, the purpose of this is that those fraudulent transactions and the proceeds from that fraudulent transactions go directly to the criminals. So this includes the appraisal fraud, property flipping, as we mentioned. It could include misapplication of funds due to a construction or rehab loan. And it also includes foreclosure rescue scams as well. So again, it's just a method of making it appear to be clean or making this appear to be a legitimate reason for requesting the sale of a property. But really, the back end of it is dirty, and they're trying to misappropriate that funds and apply that for criminal needs, which is a direct violation of the BSA. So some red flags to pay attention to, especially within the lending department, is that you may find that there's undisclosed liens on collateral once you're doing the underwriting for the loan. Definitely, first thing would be member identification, making sure that the member is who they say they are. And there's definitely some red flags to follow, of course, with your customer identification program or member identification program when it comes to verifying identity. Okay, so elder financial exploitation. This is the third trending threat that we wanted to spend some time talking about, also known as EFE. So FinCEN did release a report in April of 2024, reporting the activities between June 2022 and June 2023. So within a 1-year period of that report, 155,450 filings were made to FinCEN. So these filings would be considered as SAR reports or SARs. The filings were associated with more than 27 billion in reported suspicious activity. So if we break that down a little bit, this is, financial exploitation for our elderly community. Most of the times we find that it is a family member, a younger family member, who is exploiting those elderly accounts. They are taking advantage of check writing, of check cashing, pulling out funds at the ATM. Online banking, of course, is the biggest risk and the biggest source of fraudulent transactions as it relates to elder financial exploitation. So it's important to note that digital payment methods and peer-to-peer transfer systems account for a significant portion of elderly fraud that's committed. So again, it's usually someone that they know, unfortunately, where they've gotten access to their online banking credentials. Maybe they say, hey, I'm going to monitor your accounts for you. I'll set up your bill pay accounts. And then they go ahead and they send themselves funds through Zelle, through Venmo. And unfortunately, sometimes it is too late until your elderly member identifies that they are being exploited. So credit unions need to make sure that there are e-commerce monitoring processes in place for suspicious activity. So again, this goes back to what we discussed within the last section of the presentation, where we find this to be a common compliance issue, where your monitoring processes account for in-person transactions, but they do not account for monitoring of e-commerce transactions. So, some things to consider putting in place is implementing controls where you are looking at reports to identify if there's an unknown IP address that's accessing those online accounts. We're going to talk about that a little bit more later on in this part of the presentation, but it is definitely important to note that this is, a huge threat. It's an unfortunate threat, but there are definitely red flags that can be followed to identify the suspicious activity before it's too late. We're also going to spend some time on the trending threat of human trafficking and smuggling. So human traffickers actually use 4 different methods or 4 different ways to launder money. So the first, most obvious, would be to create front companies. So similar to shell companies, where they're, creating businesses and they're misstating the purpose of that business. It's really just for paper. These front companies may include massage parlors and businesses, escort services, bars, restaurants. So really, when we think about this, they're operating one way by day, and then maybe by night, they're operating completely different. The second method to launder money that is commonly employed by human traffickers include exploitative employment practices. So this is where they're recruiting individuals to work in the United States or move into the United States, and they are then misleading them on that employment offer. So they are either withholding their wages, or they're claiming that, oh, well, we recruited you to come work within the United States. So there's going to be recruitment fees that are applied and deducted from your wage. And most of the times, these migrants into the United States are really held hostage within that employment offer and that employment job, because they have no protections to get out of that. So when we get to the behavioral indicators, we'll talk about some of those red flags to look for, of course, to identify suspicious activity as it relates to exploiting employment practices. The third way that human traffickers launder money is through interstate funnel accounts. So cash deposits may be made within the account within one geographic area, and then next thing you know, those funds are immediately withdrawn from a completely different state. So that's a clear indicator that there is something suspicious going on, especially when the account belongs to maybe just one account holder. We definitely need to pay attention to this and identify whether that interstate funnel account has these activities to require suspicious activity reporting. And then lastly, the fourth method for laundering money does include alternate payment methods. So traffickers are known to accept payment in credit cards, prepaid cards, mobile payment applications, as well as crypto or virtual currencies. So it's not always in cash. that we're going to see large deposits of or large withdrawals for to promote and finance human trafficking. Many times prepaid cards are used to purchase virtual currency. So this is where it becomes very important to put in place monitoring processes that aren't just limited to in-person financial transactions. So it is vital that the credit union's operational staff are aware of the suspicious activity monitoring processes that we've discussed, as well as making sure that all of the employees can recognize those red flags or behavioral indicators for human trafficking and smuggling, fraud, and money laundering in general. So now we're going to spend some time and discuss some key red flags to identify suspicious activity. So in this next section for red flags awareness, we've broken out some of the behavioral indicators as well as financial indicators. So this is all information that has been pulled directly from FinCEN guidance. And it's important for all of the employees to have an understanding of what to look for when it comes to what's suspicious versus what's baseline or normal. So anytime we see that there's a third party that's speaking out on behalf of the member, trying to translate or being insistent on, they need to be the one that's in control of the conversation, that's definitely a red flag to pay attention to and see how that transaction and conversation continues to go. Anytime that you have a third party that's attempting to fill out paperwork, so maybe they're filling out the withdrawal slips or the deposit slips, on behalf of the member, or if even the member is not present, that is definitely a red flag. Something that you want to make sure that you are escalating up to your BSA operational team, a member of management, just to discuss whether or not a suspicious activity report is required. Additionally, if that third party that's present has control of the documents, has control of the money, they're the ones that are really transacting the business. The member itself is just there as a standby witness. That's also a red flag to pay attention to. As well as if that third party claims to be related to the member, but they do not know any critical details that are being asked. So some of these are, common sense. Some of these are logical. It definitely falls back into your gut instinct of something doesn't seem right with this transaction, so I'm going to escalate it. Additionally, we're all aware of, third-party identification, someone who walks in trying to utilize someone else's ID to open account or conduct business right away. That's something to be caught immediately. From a human trafficking and smuggling perspective, it's always important to note whether or not that third party is attempting to open an account for an unqualified minor. So anytime we have those type of accounts that are trying to be opened, whether they're student accounts, certificate of deposit accounts for minors to participate within those programs, it's important to note the relationship between who's opening the account and the minor themselves. Obviously, if there are acts of physical aggression or intimidation at the time of the transaction, that is definitely a red flag. There's going to be signs of poor hygiene, malnourishment, fatigue, clear signs of abuse. This is all something that we want to look for when our members walk into our branches to conduct business, especially if they are conducting business that we consider to be risky. So if they have high cash amounts for deposits, if they're requesting high cash amounts for withdrawals, if they're structuring those transactions to fall below the monetary threshold income, of course, we want to look for some of these other red flags as well. And then additionally, again, logically, if the the member is not able to provide basic details about their own contact information, about where they live, what their address is, that's a clear red flag that this may be something involving maybe human trafficking, human smuggling, exploitative employment practices. So we definitely want all of our staff, whether they're frontline or operational, to be aware of these behavioral indicators as it results to not only protecting the credit union from BSA violations, but also protecting the wellness of your members. So moving into the second portion for indicators or red flags, we're going to look at some of the financial transactions that would prompt suspicious activity monitoring or suspicious activity report. So if the member frequently conducts transactions from different geographic locations, that of course can be the structuring of funnel accounts right there, or using that account for funneling transactions through. That's something we want to pay attention to. That's something that would be prompted from an e-commerce level as far as identifying, okay, your member came in, they deposited cash within one branch location, and then all of a sudden we're seeing that there's a withdrawal of that cash, maybe at an ATM elsewhere in a different geographic location. That's something to prompt additional suspicious activity monitoring for. Additionally, if the transactions are inconsistent with your member's expected activity or line of business. So at the time of account opening, this is why it's so important for the customer due diligence program to be followed consistently, is once you utilize that CDD checklist or CDD questionnaire, you are identifying what you can expect to be normal behaviors for this account. So anything outside of that normal behavior is an automatic suspicious activity that needs to be monitored further and discussed and decided if a SAR should be filed. Additionally, we're looking for any transactions that occur outside of normal business hours. So specifically, we mentioned front companies. So those front companies would operate differently during the day. However, we're seeing a large number of transactions taking place at night when they are not operating or, it's off hours for them. That's something to be aware of as well. Specifically, a member who frequently makes cash payments, but there's no, cash deposits, but there's no ACH payments, that can sometimes be indicative of financial fraud or suspicious activity, something you want to continue to monitor for before deciding to file a suspicious activity report. Of course, we're always looking for members who frequently purchase or use prepaid cards. So if your credit union still offers the sale of prepaid cards, that's something that you want to incorporate within your BSA monitoring process. If the member has frequent transactions with online sites that are based outside of the United States, that is sometimes can be, again, indicative of whether or not they are participating in illegal activities, if they are funneling money through foreign sites, appearing to be legitimate, let's say e-commerce platforms or sales platforms. That's something to be aware of as well. Whether your member frequently sends or receives cryptocurrency can also be a factor in deciding whether or not suspicious activity monitoring should be enhanced for their account. And of course, logically, any member who avoids transactions that require some form of identification before that transaction can be completed, that is definitely suspicious behaviors. So while we've discussed customer identification processes or member identification processes, the requirement for enhanced due diligence and monitoring, we do want to add in some conversation about OFAC screening. So OFAC is an office of the U.S. Treasury. They monitor foreign countries and regions, individuals and companies who are in direct conflict with U.S. foreign policy and our national security goals. So OFAC actually has a database which we refer to as the SCN system, or specially designated national system, where anyone who is sanctioned under OFAC would be blocked or rejected from transacting or opening accounts with any U.S. financial institution. So an effective OFAC compliance program does support the overall BSA and AML-CFT programs. So OFAC screening should be performed for all new account holders, beneficial owners that you've identified in the past, all parties to a loan prior to that loan closing and loan disbursement, definitely all parties to a wire transfer, and the sale of monetary instruments. So credit unions are required to report any blocked or rejected transactions to OFAC within 10 business days of that occurrence. There is also a requirement to report annually by September 30th, and the information included within that report would be dated as of June 30th. Again, this is on an annual basis. So we're going to wrap up the conversation about record keeping. Throughout the presentation, we did discuss some of the requirements to retain documents such as the CTRs, the SARs, from 5 years from the date of filing. We're now going to extend that to some of the other information that's collected to support the BSA program and what those record keeping requirements are. So that would be specific to the member identification that's collected when opening new accounts, the sales of large monetary instruments, and we will define those, as well as wire transfers. So member identification. So any information that's collected during your CIP process to verify your member identity, that must be retained for 5 years from the closing of the account. The documentation itself and the description of the documentation that was used to verify the identity must also be retained for 5 years from the closing of that account. So moving to the sale of monetary instruments. So monetary instruments, as a definition, these would include your cashier's checks, official credit union checks, money orders, traveler's checks. The credit unions are required to verify the identity of anyone purchasing the monetary instrument in currency between $3,000 and $10,000. So records must be retained for 5 years. Those records should include the name, the date of purchase, the type of instrument that was purchased, the identifying information on that instrument, such as the serial numbers, and of course the dollar amount of each instrument purchased. So this is very important to retain. As you see, we're rolling with a pattern of records must be retained for 5 years. So make sure that your record retention policy notes these. Additionally, if the purchases are not made by a member of the credit union, the following information must also be obtained and retained. So this would be the address of the purchaser, their social security number, tax identification number, and date of birth. So most financial institutions actually incorporate policies that prevent the sale or prohibit the sale of monetary instruments to non-members. So this is definitely best practice, a safeguard to avoid any type of unnecessary risk and fraud. So record keeping for wire transfers. So when originating wire transfers of $3,000 or more, the credit union is required to obtain specific information. So again, this is name and address of the originator, the identifying information for that originator, the amount of the wire, the date of the wire request, payment instructions, the name and address of the beneficiary, as well as the name of the beneficiary's financial institution. And remember, we just discussed OFAC screening. So both parties or all parties would have to be subject to an OFAC screening as well for wire transfers. When receiving wire transfers of $3,000 or more, the credit union must retain a record of the payment for each wire transfer, as well as a record of the payment order for each wire transfer accepted as the beneficiary's financial institution. So most credit unions do comply with the 7-year requirement of retaining records specific to transactions. So again, I would just recommend reviewing your record retention policy, making sure that these specific record keeping requirements and retention requirements are explicitly described. So this brings us to, our last conversation piece for today's training, which is monitoring beyond transactions. So a common theme that you may have found within this presentation is we want to make sure that suspicious activity monitoring goes beyond just in-person transactions, beyond transactions that our members are performing. So here are 4 recommendations that Buckley Technology Group can offer to the participants today to make sure that you're enhancing your monitoring practices to support your BSA program. So insider threat. So to define that, these are your day-to-day employees. These are your board members. Your employees are actually your number 1 risk when it comes to cyber events, when it comes to fraud, embezzlement, etc. So it's very important that the credit union implement processes to review who your system administrators are within your financial processing system. So within the core, within your wire transfer systems, accounts payable systems, even online banking, making sure that those system administrators, so those who are responsible for really having the oversight and the full permissions and access rights to that system, that their activities are reviewed on a periodic basis. And the purpose of that is you want to catch any suspicious activities that could be related to financial fraud. So let's say there is a specific threshold where transactions are not able to be completed unless dual control is needed for a funds transfer. And upon your review of your system administrator activity, you see that your system administrator increased that threshold for that transaction without any approval from management or any approval from the board. So that's going to prompt an investigation. That's going to open up suspicious activity monitoring for that specific employee. So that's a very important process to consider putting in place. Additionally, we've talked about e-commerce. So again, a common compliance issue is that e-commerce activity is not included within the reviews for suspicious activities. So this would include utilizing system reports that are made available within your online banking platforms, your bill pay platforms, Zelle, etc. So some of those reports are geared towards identifying whether or not the member logged in from an unknown or a different IP address than what they typically use. There could be reports that provide information on whether or not there's been too many failed login attempts or too many frequent password change requests. So that's usually indicative of, there's someone trying to access this account that normally does not access the account because they would have that information. Now, sometimes it could just be your member who completely forgot their password or facial recognition on their phone is no longer working. A lot of passwords are saved that way now. So it could be a legitimate request, a legitimate failed login attempt, but it's definitely important to have this monitoring process in place to support the overall BSA program as well. And because we love vendor management so much, we're going to throw vendor management into the scope of this training presentation as well, where we would definitely recommend that credit unions perform OFAC screening as part of their annual vendor due diligence review. So many systems are already set up, many credit unions are already set up to run their accounts payables list through their CORE's OFAC screening process if it's integrated and seamless like that. That's definitely something that is best practice. We continue to recommend that to credit unions who currently do not include that within their due diligence review for their vendors. So definitely take this back to whoever's managing and monitoring your vendor management systems, and just ask, hey, what's our process for OFAC screening our vendors? Is it only at the time of contract signing for a new vendor, or are we periodically running them through during annual review as well? And then lastly, information sharing. So we talked about, the FinCEN 314A, which is a requirement, FinCEN 314B, which is voluntary to share information between other financial institutions. But we definitely want to see that the information sharing with BSA reporting aligns with your cyber incident response plan. So there's a lot of integration here between responding to incidents, making sure that the appropriate parties and stakeholders are notified of the incident, and then tying that back into suspicious activity reporting and filing your SARS timely. So I would recommend a review of your incident response plan, your incident response policy. Make sure that it includes provisions for suspicious activity reporting as it relates to some cyber incidents. And overall, just making sure that there is an alignment between the individuals responsible for both of these pieces. So again, depending on the size and complexity of the credit union, we know that there's multiple hats that can be worn. So, the CEO may be responsible as the BSA compliance officer. They also may be responsible as the crisis coordination coordinator following a cyber incident. So in that case, the information sharing, of course, is seamless, but if you are at a larger credit union or a credit union where those roles are separated, you want to make sure that you're periodically getting with those teams to collaborate on what information needs to be shared, what information needs to be reported as a suspicious activity report, and making sure that there is some synergy there. So now it's time to wrap up today's training presentation. I definitely give kudos to everyone who has stuck it out during the 2 hours and 41 minutes so far that we have been on this training call. And we just wanted to lightly, again, provide a listing of the learning objectives that you have completed. So we have successfully gone through an overview of the BSA program and defining the BSA's background, some basic information. We have defined and provided explanations for the 5 pillars of BSA compliance so that you're aware of what the requirements are and how to avoid weaknesses. You're walking away with more information specific to the customer identification program and customer due diligence program and how that could be enhanced moving forward, as well as the basic requirements for reporting under the BSA program, including currency transaction reports, suspicious activity reports. We've spent a lot of time talking about information sharing and how that could help enhance your overall BSA program, as well as some of those regulatory updates. So it will be only a matter of time before the proposed AML CFT rules be enacted, where we are going to see the requirement for that risk assessment to be done in order to drive the controls that you put in place under your BSA program. So I definitely recommend everyone take some of the examples that we discussed within that trends analysis piece of the risk assessment and apply that to your internal risk assessment for BSA moving forward. We definitely encourage you to continue to review those enforcement actions. use those questions that we outlined within the presentation to pull apart how those enforcement actions can be utilized as a training resource, but also how you can help mitigate some of those weaknesses at your own institution as well. The common compliance issues and trending threats go hand in hand with that red flags awareness training. So making sure that you understand those behavioral indicators, those financial indicators of red flags can help you not only avoid compliance issues with timely filing of SARs and reporting suspicious activity, but it can also help you mitigate some of those trending threats. So mitigating elderly exploitation and abuse, mitigating human trafficking and smuggling, that's huge from a identity red flags perspective and transactional perspective. While not a requirement under the Bank Secrecy Act, it is important to also understand OFAC screening and making sure that that process is applied to your members at the time of account opening, periodically following account opening, as well as making sure that that now applies to your vendors. And then finally, record keeping. So part of a common issue that we find when we do exams, when we do risk assessments and audits, is that there's controls in place. The controls are being followed. However, there's a lack of documentation to validate those controls. So please make sure that you're following the requirements to retain and keep documentation for all of the reports that are filed, all of the information that's collected to identify your members, as well as the information that you use to monitor for those suspicious activities. And hopefully we've left you with some insight on monitoring for suspicious activity beyond just transactional in-person dealings. Hopefully you can take what we've discussed and apply it to your e-commerce platforms, apply it to how your admins monitor and conduct activities and changes within your critical systems. So as a whole, we find that BSA, it's definitely one umbrella, but it applies to so many other compliance areas of oversight within the credit union. So we definitely encourage you, again, utilize the chat feature. If you can think of a question now, if a question pops in your head afterwards, feel free to contact us at Buckley Technology Group. You can reach us at buckleytechgroup.com. Email us at info@buckleytechgroup.com or call us directly. So it is important to note that we have been a business partner with the Hawaii Credit Union League for over 10 years, well over 10 years now, in assisting Hawaii credit unions with their compliance programs, including BSA, IT, cybersecurity, vendor management. So, we're definitely thankful to be invited to present this training opportunity to the Hawaii credit unions today. And we, again, encourage you, utilize us as a business partner, utilize our resources. Feel free to ask any questions. And anything that is submitted through the chat will be responded to, and we will provide that within a Q&A sheet so that you have access to those resources following the presentation. So at this time, I am going to turn it over to Eugene and Sayaka.
Mahalo, Elizabeth and Jennifer. That was a wealth of knowledge that you shared with us, and we truly appreciate you. Guys, if you can use your react button to give them an applause for a job well done, we thank you and we appreciate you so, so very much. Just want to reiterate, please send any questions in the chat that you may have. If you think of something, you can either email me or Sayaka here at the League, or you can email Buckley Technology here. You see the info right here on her slide. Thank you, Elizabeth. We truly appreciate you. And Jennifer, thank you all so much for taking the time out to present our BSA training this year. We know the 6-hour time difference is a major, a major appreciation that we truly appreciate that ask. And we know it's late where you are. And thank you for working over your normal time frame for us. We truly appreciate it. With that, I will turn it back over to Sayaka. Thank you.
Thank you.
Hi, everyone. Thank you again to Buckley Technology Group, our wonderful business partners. And in closing, I would like to highlight our upcoming educational opportunities and encourage everyone to attend our Operation Compliance Seminar on August 20th to the 21st, and also our Regulatory and Governmental Affairs Conference in November. Hope to see you there. If you have any questions, you still have time to drop them in the chat or email us, and we will respond to you with a follow-up email. Okay, thank you, everyone. Mahalo for your attendance and keep living the dream. Bye.
Bye. Thank you, guys.